The initial public offering or IPO of food delivery company Zomato has been subscribed more than 3.8 times so far. Ever since the pandemic-induced lockdown, a record number of demat accounts have been created and interest in IPOs has peaked. With several tech companies taking the IPO route in the coming weeks, it's important to understand how shares are divided and how they're allocated to investors in an IPO. Each category of investor has a reserved quota or percentage of shares offered by the organization. When an IPO is announced, there are different types of investors who get access to the shares. Qualified institutional buyers or QIBs, like commercial banks, non-institutional investors, NIIs, who are largely high net worth individuals, and finally retail investors or the common man, which includes resident Indians and NRIs. Firms that show 3 straight years of profit must allot 35% of the share sale to retail investors, 50% to QIBs, and 15% to NIIs. Organizations that can't meet this criterion must allot only 10% to retail, 75% to QIBs, and the rest 15% to the NIIs. Shares are bid for in lot sizes, which are fixed between 10,000 and 15,000 rupees. Sometimes an investor might not get a share allotted when an IPO is oversubscribed. An IPO is said to be oversubscribed when investors apply for a greater number of share lots than on offer by the company. If it is a small oversubscription, then the Securities and Exchange Board of India (SEBI) says that each investor should get at least one lot, after which the remaining lots are allotted proportionately to the percentages mentioned above. However, if the IPO is oversubscribed to an extent where each investor cannot get one lot, then a computerized lottery system is used to allot shares, in which case many subscribers might end up with no shares. Well, if you miss out on the Zomato IPO, don't worry. 30 companies have filed IPO papers and are likely to hit the market in the coming weeks. These include Paytm, MobiKwik, and the biggest of them all, the Life Insurance Corporation's IPO, the Federal Report.